Welcome back, and thank you for returning for part two of the Windstream Enterprise Financial Services Sector Security webinar. I am your host, Bucky Porter, Financial Services Industry Analyst with Windstream Enterprise. In the first episode, Tracy Fox, the National Director of Partner Enablement with Foresite, covered historical and ongoing security concerns, as well as beginning to discuss current trends in financial services security. In part two, Tracy and I pick up our examination of current trends and look to the future with developing security threats and changes in the regulatory landscape.
Now, something else that we see, and we look back again on those statistics about threat detection, that's one of the questions that I get the most, I think, is why, if all of these regulations say that you need to detect threats, and people have invested a lot of money in solutions to detect threats, why is it still so bad? And I know that we've dealt with financial organizations that have invested in six-figure solutions to monitor for threats. The cost of staffing those solutions is part of the problem, because if you're going to monitor 24/7, 365, and you want to have some trained security staff, even a basic security operations center is estimated to cost about $1.5 million a year on an annual basis just to cover that, right? So most banks, credit unions probably are not going to be able to fund that cost. And then when you get into higher level with more advanced capabilities, then you're going into the multiple millions of dollars. So this is one reason, just the financial cost of having a security operations center. But let's say for a moment that you have an unlimited pocketbook, or at least you've got enough of a budget because you know that this is a big enough challenge and you're committed to solving it, that you're going to fund having your financial institution have a SOC and getting the right trained security resources in place. Now the problem is that there's just a sheer flood of alerts. So the tools that look for alerts, and alerts means something unusual. We know that malware or attackers, there's certain things that they do, certain patterns that could indicate a threat. So if you're really trying to detect a threat, you've got to investigate every one of those, because you never know what's going to be the one. That's what happened with Target. Remember that breach years ago? It was massive. They had an outside firm that was monitoring and sending the alerts to their internal security team. But they got such a huge volume of alerts. Again, the latest estimate's 11,000 alerts per day per analyst. So they didn't see something that stood out so much that they went and took action to go and look at it. And sure enough, one of those alerts was the fact that the hackers were in their network. And so when they're sorting through all of those alerts and just trying to close them out, they're not doing as much time proactively hunting for threats and proactively investigating every alert. And in this Palo Alto report, where they interviewed security analysts, they were saying that only about 47% said they even get through their daily alerts. And so that's a scary thought, right? There's going to be so much coming through that isn't even investigated.
That is scary.
But and another problem is, so you say, all right, we're going to need to hire more people. That's a problem too, because there's such a shortage of cybersecurity professionals in general, both from the C-level, but also for people that are able to work in a SOC or take action on incident responders. That's one of the biggest gaping holes. And the shortage is just continuing to grow. It's expected to be over 3.5 million positions that can't be filled by the end of 2021. And so this is why it's such a challenge to detect, such a challenge to appropriately respond to the threats.
Yeah, and in this industry, particularly in financial services, we've got so many community banks that are located in rural areas because that's where they serve their customers. The talent pools in some of the smaller towns in rural America, they're not there. And these shortages are probably seen even in major metropolitan areas, but particularly toughest for some of our customers and our prospects and our listeners who are in areas that aren't in these centers where some of these high-tech folks tend to gravitate. So it can be tough.
Yeah, you're exactly right. And that's one of the reasons actually at Foresite, our original headquarters was based here in Connecticut where I'm located. But when we opened our security operations center about 10 years ago now, we actually moved our headquarters to Overland Park, Kansas, because there were enough bigger players there. It's almost like a cybersecurity corridor, sort of like the Silicon Valley was back in the day. And then, of course, MIT, pharmaceutical, and that type of expertise. Believe it or not, Overland Park, Kansas has that reputation for security analysts because of some of the bigger players that are there. And so that move was a very strategic thing on our part to be able to get more of that talent pool for ourselves. And so we did want to talk about what we see with financial organizations and give a couple examples, even though we can't discuss specifics or anything that would give away who the clients were. Just wanted to talk through a couple of the things that we've seen. And one of those issues, as we said, is even if you outsource your security threat monitoring, not all of the solutions are created equal. And this was an international financial organization. They had a really strong internal IT team, and they even had a dedicated internal IT security team. And so they went with a Gartner Top Quadrant MSSP, and they were very surprised to find that they were getting flooded with alerts, and that the problem that also led to for them, in addition to just the sheer number of alerts, was they also then didn't have the ability to look through the log data to be able to do their own investigation. So when these alerts would come in and their internal process would say that their security team needed to start looking into them, needed to report to the C-level, start giving them information about what systems might have been involved and what the potential exposure was of client data. But they would have to wait for their outsourced MSSP, managed security services provider, to give them the information. And what was the last straw that led them to looking for another resource and getting engaged with us was they had a confirmed incident and they couldn't get access to their own data for over 2 weeks. They had to wait for that data to be packaged up and sent to them. Now, some of the reason for that is a lot of MSSPs outsource their security operations center, and that was the case here. So the fact that people from outside the country had to put together these data packages and had to go through internal processes in order to get it back to the client took a lot of time. But in the meantime, these internal resources were reviewing false positives, so that was wasting time for them. These delays in the investigation, when that 2-week delay happened, they had to go in front of their board. Their C team didn't look good, they didn't look good, and they were definitely committed to making a change at that point. And also, their internal team would have to be on call 24/7 because with a lot of managed security providers, the reason they couldn't see their own logs was because if you want the provider to be able to make any change to that firewall, then you have to turn over access to that provider. And so the internal team wasn't willing to do that. So that meant that any change that had to happen to the firewall, regardless of what time, they had to have somebody available to do it. And one of the issues they had run into with that is the internal IT staff getting sick of being called 24/7 to make emergency changes and leaving to go work somewhere where they didn't have that. And as we talked about, it's hard to find people, so you don't want to have issues that cause that retention to be even more of a problem, have that turnover. With this credit union client, they had reached out because their internal IT was told that they were going to have an upcoming audit, and they were trying to do the things that they were supposed to do. They did have an outside IT consulting firm that they worked with, but they weren't convinced that either group really understood the compliance requirements to the level that they needed to, and they wanted to make sure they passed this audit. So they really wanted to have an outside firm who specialized in cybersecurity and compliance come in ahead of the audit and make sure that they were well prepared. And the things that we found were really common. A lot of focus on edge protection. Let's keep the bad guys out, without much focus on, well, what happens if either the bad guys find a way in, whether they find some exposed credentials of an employee out on the dark web, or they get in through one of those vulnerabilities we talked about, or even a rogue employee who has some internal access. If you don't have enough internal controls and monitoring, you may never know. So that was a weakness. Technical solutions that they paid money to protect them that weren't implemented properly. They don't give the full protection, and just as importantly, they don't meet the compliance requirements. So simple example of that is we see a lot of cases where people have spent good money on a really strong firewall, and it has all the bells and whistles, and it should be able to protect them at a very deep level. But if it's not set up properly initially, and some of those bells and whistles don't get implemented at all, which, believe it or not, we see pretty often, where somebody just didn't know how to deploy them, so they never did, or it gets set up properly initially, but maybe somebody goes in and an outside vendor needs access and they don't know how to make that change in a secure way, so they just open the access, so that they're solving the immediate problem of somebody needs this access, but they're not looking at it from a security and compliance perspective. So they had that situation, and they didn't have true 24/7 monitoring, even though they thought they did. They had a solution that was a freeware solution that their IT team would look at when they had time. The C-level didn't realize that. They thought they had 24/7 monitoring. And then the third bullet here, this is probably one of the most common things we see, is they were doing a lot of the things that they should be doing as far as process and procedure, but it wasn't documented. So when an auditor comes in, they want to see that it's documented so that they can see how you would know that it's done every time, and how anybody doing this process would know that they were doing it in the right way. If it's not written down, it's just tribal knowledge, then it's always a danger that that's not really happening. And that's why compliance does require that you document your policies and procedures.
Well, Tracy, you know, as we both know, and as scary as everything we've just talked about is, cyber villains are always looking for new ways to exploit. And I think you used the term earlier on, they evolve. Their types of attacks are evolving. And they're looking for ways to find new ways to penetrate the network and infrastructures. And then on top of that, banks and credit unions are dealing with financial regulators that are always changing and updating requirements. Are there any trends that you see in either new attack methods or maybe regulatory requirements you've had a peek at on the horizon that our listeners need to start planning for now?
Right. Well, as far as new attack vectors, I think the biggest thing to know is that it's going to continue to evolve. So we always have to be trying to think about what are these new potential vectors. But honestly, if we all knew that, we'd be making a lot of money in being able to prevent it. So unfortunately, we have to just detect it and react. But that doesn't mean we don't have any future cybersecurity insights. And the congressional hearing that happened in May, there were executives of 6 of Wall Street's largest banks. They said cybersecurity was the greatest threat to the U.S. financial system. And that concern was also shared by the Federal Reserve Chair, Jerome Powell. And so out of that, the Federal Financial Institutions Examination Council, or FFIEC, they took the step to update their Information Technology Examination Handbook under the Architecture, Infrastructure, and Operations section. And what they are trying to do by making this change is take the time to instruct bank examiners specifically what to look for in bank cybersecurity risk management. So it looks at the technical controls, the solutions that are in place and how those operations happen, and gives them stronger guidelines to understand how to identify risk, to bring in senior management. They stress that it's not just an IT issue. You really need to have senior management along with IT to make the right risk decisions and to fund the risk initiatives that IT identifies. And so I think that's an important step for banks and credit unions to be aware of for sure. Now, also, something that was very recent was just in June, the Security and Exchange Commission announced that they settled charges against a real estate settlement services company, First American Financial Corporation, and I can talk about this because it was public news, that they were found to be lacking in disclosure for controls and procedures violations related to a cybersecurity vulnerability, and it did result in exposed sensitive customer information. And it was actually a cybersecurity journalist who figured out the vulnerability, saw some chatter about it on the dark web. They reached out to First American's information security personnel and made them aware of this. So they knew about the vulnerability for months, but they didn't remediate it. And according to all of the reports that I was able to get access to and read, they didn't notify their C-levels either. And so that meant that this vulnerability was not addressed in accordance with the company policies. Now, maybe it was because those policies weren't documented and somebody didn't understand what they were required to do. The IT level might not have known what those requirements were. But the bottom line was that over 800 million records were exposed, and this vulnerability obviously went back a long time, but also they had a huge data set that went back to 2003, and that's why that number is so large. The SEC's penalty was $487,616, and they gave them a cease and desist. They had to immediately take down their application. They couldn't use that software that they had spent all the time and money developing and collecting money for use of. They had to shut it down. The other important thing here is the New York State Department of Financial Services has also filed charges. Now that's still pending, but they have a potential penalty of up to $1,000 per record. So when you think about 800 million records being exposed and a potential exposure of $1,000 per record for a fine, obviously that's huge. And even if they come to a settlement, again, cyber insurance often does not cover regulatory fines or legal judgments. So think about those numbers and what kind of impact that's going to have.
That would certainly cripple most businesses.
Absolutely. Want some good news?
Absolutely.
I like to leave with a little bit better news. There is a way to minimize cyber risk, and there is some protection coming under U.S. legislation. It's called Cybersecurity Safe Harbor. So why was Safe Harbor created? Because of this concern, like I said, you can have an unlimited pocketbook, but you can't control vulnerabilities in other people's technologies that you need to put in place. You can't control the fact that you have to allow access of data in and out, and you have to rely on humans who are not perfect and might not always do everything they're supposed to do. So the argument that they want to get away from here is for me to be able to say, listen, I run a credit union and I don't have an unlimited budget, and you're telling me there's nothing I can do that's 100% effective. So why am I going to spend money to proactively address this? I'm just going to hope for the best and save my money to deal with it on the other side. That, of course, is going to lead to a lot more breaches. And so right now, cybersecurity safe harbor legislation has been passed in Ohio, Utah, and Connecticut. It's pending other places, and we're hoping and assuming that it's going to become a federal legislation. But what it's saying is, instead of coming up with another framework, which was initially addressed, a federal cybersecurity alignment, we have all of these frameworks that already exist that people should be aligning to. So why don't we just say, if you proactively align to one of these recognized frameworks, that we're going to allow you to invoke cybersecurity safe harbor in order to not be hit with regulatory fines and not be subject to legal class actions if you've taken reasonable precautions. And so that's why you have to align and maintain a recognized cybersecurity framework. So it's not Tracy said I should do X, Y, and Z, or Bucky said if I put this solution in place, I'd be good. If you truly align to the NIST cybersecurity framework, or whatever framework that you choose that's recognized here, then you can invoke safe harbor to have that protection, because nothing is 100%, right? And so that's where it's really critical. Now, the other thing to think about here is that when we talk about cyber insurance adjusters looking for ways to refute a claim, if you can say that you were aligned with one of these recognized frameworks, that gives them very little wiggle room. Again, you're not going on having to go after them to collect your millions of dollars of coverage because they're saying what you did wasn't reasonable and you're trying to argue that it was. Now you say, well, we align to the NIST cybersecurity framework. That's a recognized standard. Therefore, we did what was reasonable. They have yet to be able to wiggle out of that.
Well, Tracy, I know that we've covered a lot of ground today, and I appreciate you sharing all of that with us. But so that the audience has kind of some takeaways, why don't we just kind of recap a few things that, if they don't do anything else when they end this webinar, what should they be focused on?
Yeah, don't wait for an incident to think about this and start looking at it. Do a risk assessment, understand what assets you have to protect and where they are and who has access to them and what controls are in place, getting an understanding around that. Ideally, maintaining that alignment to a recognized cyber framework. I really can't stress that enough, because anything short of that is going to be up for debate as to whether or not you did what was reasonable, and it's going to leave you open to a lot more exposure. And leverage outside resources where you need to. Now, even when you have internal teams, it's great to get an outside view, people that specialize in cybersecurity and compliance, but even if you have those folks on the inside, it's sort of like proofing your own work. There might be something that they're just not seeing or that they assume is in place because it should be. So having an outside resource just do that verification can be helpful. And certainly, if you can't find the resources, or you can't afford them, or you can't have them 24/7, or you don't need them all the time, those are good places to leverage outside resources instead of just ignoring the fact that you probably do need to have some of these people to pick their brains, or to be covering you 24/7, or to be able to help you respond to an incident. And so that's where we can together help, is cybersecurity as a service. Think of it this way. There are going to be some things in this whole layered cybersecurity approach that you can certainly do internally, or your IT provider can help with. What this kind of model allows you to do is to outsource or partially outsource to supplement what you already have access to. It also provides separation of duties, because you don't want to have the same resource testing that implemented the solution or investigating themselves if there's a cyber incident. So separation of duties is required by some of the compliance standards. PCI is a really good example, but it's also a best practice and a best protection on your behalf.
That's fantastic. Well, Tracy, I just want to thank you again. It's been a pleasure visiting with you and having you provide me and our listeners with guidance that hopefully will help them build a plan for what to do concerning security issues in their financial institutions, or edify possibly what they're already doing at their bank or credit union today. And I also want to thank our audience for sharing an interest in this topic. I look forward to bringing you future webinars with topics impacting our industry. And if you have any questions about how Windstream Enterprise and Foresite can assist your financial institution, please reach out to me at the email address on our presentation. But for now, have a great rest of your day, and please join us again.